Roku stock price has fallen over 76% year to date, and I do believe there's two red flags that investors should know. I personally am bullish on Roku stock, but I believe it's always important to understand both the good and the bad. And like I mentioned on today's episode, I want to take a closer look at two red flags that you should know about. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
I want to say the first big red flag is this is a company that's growing but is trying to do so much at once. For example, in early October, they mentioned that they're entering into the smart home business. Now they're going to be selling things like cameras, doorbells, lights, plugs. Two issues here. First, the hardware market is one with very low margins. Second, the smart home is very different from their streaming platform and from their original business, right? So this is definitely a red flag here. Not only that, they're also in other hardware like Roku players, like Roku TV, and like Roku audio. And like I mentioned, the hardware market is one that can continue to be affected by inflation. Higher materials, higher shipping costs, the overall consumer spending decreasing as well. So overall, I do want to say not my favorite move for Roku. Outside of the hardware, Roku has its platform, right? And I do believe the platform is super strong. But again, like I mentioned, this company is trying so much at once. The other kind of business is entering is the Roku channel. The licensing fee can get pretty hefty, and if they are making their own original content, that itself takes time to make and also money to produce. So let me know in the comments below, do you think Roku is trying too much at once, or am I just overthinking it? Also, if you are enjoying the episode so far, make sure to hit me with a thumbs up, as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. The second red flag for Roku takes us closer to its financials, and I do believe their financials, especially their expenses, are ballooning. Research and development in their most recent quarter was up 74% year over year. Sales and marketing was up 97% year over year. And unfortunately, because of that ballooning effect, the last 2 quarters have been a loss from operations. Here we take a closer look at this white chart graph. I wanted to see the growth of expenses, the overall growth of revenue, and also the overall growth of operating income. And here we're taking a closer look at trailing 12 months. The start date is June 1st of 2021 till now, and we can see sales, general, and administrative expenses have grown 59% since that time frame. In that same time frame, research and development has grown roughly 52%. While both these expenses have grown over 50%, Roku's revenue has only grown 31%. And with that huge growth in expense, unfortunately, operating income has deaccelerated. We can see early and late in 2021, operating income was growing at a steady level, but now it is down roughly 120%. So like I said, I am bullish in Roku stock, but I do believe these are two red flags that investors should keep an eye out. I hope you guys enjoyed today's episode, and if you want to learn about AMD and the strength of its data center market and why I believe will be a huge winner to investors, make sure to check out this video above. Take care, have a good day, and see you next time.